All right. Good morning and welcome back, guys. It's morning. So, this is our daily market review. And one of my biggest purpose doing this video is that I want all my audience to know how to uh, determine their daily bias. If you are the trader, right? If you know how to determine your daily, weekly, even the monthly bias. So, we're not going to waste much of the time. I will take like 3 minutes of the time to talk about how to determine next day bias. Now, if you want to know more about this, is more than what you are going to hear me say right now. That is, it is more like more than the things I'm going to tell you right now about the daily bias. But I think if you follow up every day, then and every day that we have different different kind of markets, we can actually use that day to determine what daily bias. Now, first of all, if you are trying to determine your daily bias, you need to know any PDR rates. You need to identify the nearest PDR rate to your daily time frame. So on this particular day, we are trying to determine today is this particular candle. I'm recording this video uh in Monday morning. So Tuesday morning, sorry. So this is the Monday candle that has delivered. So we are trying to see how Tuesday is going to go. Now, if you already know that at the back of your mind, then if we have the Monday like this and we have a fair value gap formed, now this fair value gap will not be treated as an what institutional order flow entry drill. Why? Because we it is an up close fair value gap. Assuming it is a down close fair value gap, it could be more and more effective than this an up close candle fair value gap, because sometimes an up close candle fair value gap that yes, and a fair value gap that is formed with an up close candle at the end of that fair value gap might deliver price higher, and then we turn that fair value gap into an inversion fair value gap. So you get, I don't know if you understand what I'm trying to say, that today what if Tuesday my price higher and what form what and leave this day and make it what an inversion fair value gap. But now we're going to use these three consecutive candle, which is this one, and this one, to determine our bias. We're going to add what other characteristics that is here that has happened before. Now we see that there is a heavy down closed candle here, up close candle here, which is a bearish order block. Now, and this fair value gap now is inside this bearish order block. So that's why we're anticipating for a lower prices. And now we can see the area where price is rallying from. Now price is rallying from a fair value gap, a weekly inversion fair value gap that has already been used, meaning that it's already been used. And now what are they trying to engineer? They are trying to engineer liquidity for this sell side liquidity. How do I know this? We can now see that this candle and this candle is an equal low. All right, this is an equal load or relatively equal loads. And now when you have this relatively equal loads and they are pricing it higher, the retail traders will see it as a what? A support. All right, they tell that, if you even look at this line now, this gap between this area now is a support line. And if you know that there are people that have their stop here already, but they could be in profit, and if they don't take that profit, the price might eventually come take them, or we might continue going higher. It just depends on so many analogy and characteristics. And before I go into talking more about today candle, I hope if you are learning how to determine your daily bias, I hope these few tips has helped you. And you can sit close tight or sit tight close to us so that you learn more as we go into in depth about determining how we are going to determine tomorrow bias based on what has happened today. Now, the Euro US dollar daily contract for Monday 25th March 2024 deliver higher as anticipated from Friday price projection and the weekly market review. Now, the price delivery for Monday has delivered as we call out. Now on Monday, on Friday, we call that we could see two things. It's either we open and we continue lower, we take the short term sell side and price higher, and rather, or we price higher into the 4 hourly fair value gap. Because we have a 4 hourly fair value gap, then if we trap into it, then we're going to go lower. Now we have two scenario. Now we have done one of the scenario, which is that price go higher into the 4 hourly fair value gap, and now we are inside that fair value gap. Now I am very pleased to see euro price into the area of interest, and also leading to the formation of an ICT fair value gap, which is CB, which might be the catalyst that will deliver price lower in tomorrow Tuesday price delivery. Now, what I mean by that is that today candle has formed this fair value gap, just like as I explained earlier, and that fair value gap might be the catalyst that will lead us to price lower going into today, which is no longer tomorrow, because I'm recording this video Tuesday morning, which is going to be today. Now on the daily contract, we can also see how that weekly inversion fair value gap is being used as a very strong PDRA and as a support, and how price has reacted off from it anytime it feels that area. What I'm referring to is this area. You can mark out this area in your chart and go and look at how market has been using them from the lower time frame down to the higher time frame. Now on the daily, sorry, if euro find its way into the fair value gap or CB, we will be projecting for a strong price reversal if that's an area of interest for the algorithm. Now our draw on liquidity today is sell side liquidity, but we are going to take what buy side, which is previous day high. Then we're going to look for what previous day low. If the fair value gap is still going to be utilized, how are we going to know offhand? We are going to see that from the lower time frame. Whenever we see any sign of a reversal on the daily time frame, during the London or New York session, then we're going to make use of that and utilize that area, and utilize that formation, that pattern, or whether you call it a pattern or some form of characteristics that we find in the lower time frame. Now that is something you will call an odd entry criteria. So everybody should have something you have as a criteria for you to be in the market. So if you see your entry criteria on the smaller time frame, you can actually go and anticipate on it. So that has brought us to uh the daily contract for euro. So we're going to go down to the dollar index and also see how that area is being utilized. So this is the dollar index, which is the XY daily market daily contract, and also on the dollar index. Now, this is why you see that euro is still pricing more into the fair value gap, because on the dollar index we haven't even gotten inside that fair value gap yet. On We can also that see on the dollar index that we have this fair value gap and we have this up down close candle, which is a bullish order block inside that area. And I don't want to fool my chart with some form of lines. And so, truth be told, I am waiting for the like I'm anticipating for today price to tip a little bit inside this candle high, which is the down close candle, the high. I want to see, so because the bullish order block that's inside and the fair value gap is inside of it, so I want to see us tap on it, so that we're going to make use of that two criteria or two PDRA as a catalyst that is going to deliver us higher. Then we have this, or if you go on a lower time frame or 4 hour, we're going to see that this particular area is a buy side liquidity. It's a swing high because we don't use any kind of area as a liquidity. We only use swing high and swing low, old high and old lows. So before this area, so how if we're going to come above here, we don't know yet, depending on how we close above this area. All right. So and if today really price higher, taking sell side and also buy side, that will indicate that that will indicate that this particular price delivery might become a bullish order block going forward. So we're not trying to impose any kind of factors into our charts before they actually occur. I hope you are getting what you are here to get, the information you want to get on how to determine your daily bias. These are all criteria that you need to check out for your area of liquidity, where price is trading at, and where price, which low are we coming from, and where are we going. So which high have we just taken? Which buy side are we looking out for? Which sell side are we going to look out for? So now we are looking for buy side, and we are utilizing what is a bullish PDRA. All right, this fair value gap is a bullish PDRA, which is buy side imbalance, sell side inefficiency. So, which is a CB, and we are using that to be our criteria to price higher. So that will bring us to the end of the daily contract. So instead of going to the 4 hourly contract on euro, let's just go to the dollar index 4 hourly contract before we go into euro, because they basically look very the same. So that buy side I was referring us to that time is this buy side liquidity, and you can see how closely the market is trading at that area of interest. All right. So I mean, you can see how that area was being utilized, because this is a bearish order block and we price into that bearish order block, meaning that there is stop loss or there is a liquidity in that particular area. And also, let's deep down, and now this, we want to see reason why price should not get here on a lower time frame. Now, this is an efficient price delivery. That is, we price down, we price up. And now, if this is like completely painted, I don't know how to tell you that, but the price has completely what paints, uh, paint its hands on this side and also this side. So here is already what an efficient price delivery. And if you want to confirm that, is we have a fair value gap here that was used as an institutional order flow entry drill at this point, which is a little tip inside the fair value gap and price rally higher. And now we can't measure this high and this low as our um like using your Fibonacci. It is better you make use of your Fibonacci from here to here. All right. So if you check that when price was here, then you can actually make use of this discount price. But currently you can't make use of this. Why? Because this is an efficient price delivery. Rather, we're going to make use of this from this low to this high. Okay, there are these are ways you determine your daily bias. That does not mean that you're not going to take a loss, or you're not going to be take a take loss or assume risk. There is always risk in the market, irrespective of anything. And now, if now on a daily time frame, we are seeing this area as order block, right? But on a lower time frame now, it's now acting as what, a bullish breaker. All right, bullish breaker. And the fair value gap is inside that bullish breaker. That's why we also looking for price to tip its hands into that area for us. Now, since here has already given us a sufficient price delivery, we can fully trust that price will not come below here if this PDRA is effective and is a catalyst that will deliver us higher. So, with that being said, we can now go on the on the hourly contract for euro. So this is the euro US dollar 4 hourly contract, and we also can see on the euro we have these buy sell side liquidity which we are looking out for. Although we have previous day low and this one and relative equal lows. Now this is why, if I told you that if you come on a lower time frame, you will be seeing this as a support. all right, as a support, a very strong support. But we're not going to see that as a support. Rather, we're going to see that as the area of liquidity that we are going to purge. We are looking for price to purge, and also we have efficient price delivery here already. Why we shouldn't see price go into this area? Here it has already delivered efficiently, and this volume imbalance here has already been used as an institutional order flow entry deal, and we have our bearish breaker here. So all this is a sign that is a sign that euro and the xy moves in reverse to each other. So without wasting our much time, let me go through what I have here. Now the euro US dollar 4 hourly contract shows how nicely price delivered in today trading. Now on the 4 hour, we can see that euro has priced into the 4 hourly in fair value gap of CB, and price is trading on that area of interest, with which which is already anticipated that should be a catalyst to deliver price lower and seek sell side delivery. I am anticipating also for the bearish order or bearish breaker inside the fair value gap to be utilized. That is this bearish breaker. So that's all we have on this. And if you maybe if you on this chart, you should also, let's for example, you take any form of trade, you should also be cautious about this area. Although shit, although that might not be very effective, this bullish order block, fair value gap, right? Since we are looking for this drawn liquidity, we might but have your nose on this. So maybe if you take any trade, you should take partial when we get here, so that if you see any reverse activities, you don't get turn off, or you don't get your your adrenaline will not get triggered. Okay, so you not get afraid, and that's it for the 4 hourly contract on euro. So let's go to the hourly contract on euro. Then we're going to call it. So I even had to put this on my chart. Now this is where it's going to get tough, as we are deriving higher and we are forming a fair value gap. We are not supposed to be seeing something like this form. All right. Why? Because we are supposed to deliver efficiently towards that area so we can move lower. And that is now limiting that factor also. I'll take this off my chart because it's really not necessary. So, the Euro US dollar hourly contract shows nicely the intraday price delivery on Euro for Monday, 25 March 2024. The daily profile is an obvious 4 o'clock a.m. New York local time candle as the low of the day that sweep the Asian low and tap on the what bullish or OB form on Sunday opening price, which is today price delivery is an insider day candle. Now the high of the day is from 9 o'clock p.m. New York local time that price into the hourly used inversion fair bearish fair value gap, which is a CB, and remain on that price. Now the draw liquidity is we are looking for the premium fair value gap to be tapped before we deliver sell side. This is a premium fair value gap. If you take your Fibonacci and measure this, now that is what I'm saying. We're not going to take look at all that. We're going to measure this, and we're going to take this our premium price. So we price to the discount, and also we have used this fair value gap already. Reason why we're not going to see this fair value gap as a catalyst for us to be on the chart on the price. Rather, this clean one that has not been tapped. So that's what we are looking out for. And if this is your first time stumbling on this page, please do subscribe to this channel, please. So you're stumbling on this page, please subscribe to us. And that has brought us to the this video will soon end. So that has brought us to the XY, and on the XY we have this fair value gap that remain on top. So reason why we are looking for this premium fair value, discount fair value gap on the XY to be tapped and utilized. So I hope this video of how to determine daily bias has served you well. Tomorrow we are going to come with another one, another episode. So